Welcome back to the channel. As always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look at a stock today called Micron Technology, what those guys do. So they develop, manufacture, and sell memory storage products worldwide. So if you're familiar with, these sticks where you store data, that's the kind of product that these guys produce. And it's used, of course, in PCs, but also increasingly in mobile phones, in cars, in products like that. And why am I looking at the stock? Well, uh, first of all, you can see that this is a stock that rose significantly during the pandemic. Obviously, back then there was a lot of demand for IT components to drive the growth of the internet during the lockdown. And after that, in 2022, the stock crash, which is no surprise because the market in general did crash. But more importantly for these guys, and this is something that you can see in the subdued continuation in 2023, there was a significant slowdown in demand for these products. But now, in 2024, the market is expecting a comeback in storage products, which, as you can see from the start of 2024, the stock has recovered significantly. So we started the year at around 82, and it's currently sitting at 131, having uh, barely touched the 160. So of course, that is a phenomenal return. So the stock is up 50% year to date. So if we were to compare that, right? Uh, Here we got all the numbers. If we were to compare that as to how it's performed against previous years, you see that the performance actually has not recovered the 2022 levels, uh, but it is expected to come back to those levels this year and actually go far beyond in the two subsequent years. And that's one of the reasons why I am bullish on the stock. EPS is also expected to go from negative to positive in 2024, hence why we're seeing that rally so far this year. But also after that, it will grow significantly thereafter. So the earnings, we can have a look at that later. But I wanted to show you quickly how year to date the stock has performed. So the stock's up 54%, whilst the market is up 15%, and the semiconductors ETF is up 28%. So even with this drop that we have seen here, where the stock was up nearly 85%, now up just 54. That's a significant drop. Still way outperforming not only the market but its peers. And if we look at uh, the expectations, right? So let's have a look. Uh, so EPS gone from a loss of 4 to 121 this year. But more importantly, in 2025, it's forecasted to reach 9. So it's going from 1 to 9. And that is definitely a big swing in earnings. And I think that's why the market has rewarded the stock. But I also have other points as to why I think it's happening. This is obviously a growth company and one that is benefiting from tailwinds in the AI space. Now, um, with AI, obviously the most immediate winner that we have seen is NVIDIA. But when you look at the efforts that have been done in that sector, the focus up to this point has been mostly on the computing and infrastructure side. And the expectation is that once that is built, the storage demand will start to flow. So I think that's why the stock has been rewarded. Now, this is a 145 billion market cap company, not the type of profile that we would typically look for in a long. But in this market, small cap companies are getting punished. And we see big cap organizations uh, being actually doing okay, which is unusual, but is the market that we're in. So if we look at the ETF exposure, right, you can see that this is contained in big semiconductors. Um, it has exposure to all those ETFs. So overall, with all those things, I'm pretty bullish on that name. The earnings back in late June was phenomenal report, but the stock was down a little bit, I think around 8%. So why is that? Well, let's look at overall sales beat, EBITDA beat, EBIT beat a little bit, and EPS was too. The market seemed to have expectations just in line with what was actually reported. And because of that, we see this drop over here. But if you ask me, I think considering the circumstances that the market, this particular industry has seen, are quite challenging because first, the recovery for demand took a bit longer than expected. It was expected to happen back at the end of 2023, and it didn't happen. And also at the beginning of April, just around here, there was an earthquake in Taiwan that obviously impacted the operation of these guys a little bit. And that's where you can see the stock dropping over here to previous levels. But it recovered after that significantly. So it went from 106 all the way to 150. So that's nearly a 50% return in the space of a couple of months, right? Which is very, very good performance. So earnings were okay. Market is still paying not an atrocious amount for the stock because if we look at the sector overall, so I've put together all these names here. This company used to be around here, used to be one of the leaders in terms of valuation. And the earnings were so good that that has dropped to a middle of the road. So I consider this a buying opportunity to enter into a high growth company that is benefiting from tailwinds in the industry. So in terms of their outlook, the company was forthcoming in saying that um, they are optimistic because the planned Windows 10 and the end of life in 2025 and the launch of Windows 12 will introduce a new generation of AI PCs, and the PC replacement cycle will start in late 2024 and will gather some more momentum in 2025. So, with all those things, I do think that this valuation is certainly attractive. I can see the stock growing into the projections that is set for itself. And overall, I'm bullish. So I want to get exposure to go long and benefit from that ride as we see how the growth of the AI infrastructure requires of more and more storage demand to fulfill those capabilities. Now, in terms of risks, it's always unpredictable with technology. What may happen, what competitor may launch next month, and what changes may take in the industry that alter our thesis. So, aside from that, the industry downturn can take a little bit longer than expected, and this is why it is likely that I keep this stock in my watch list for quite some time, possibly entering um, around late summer or even at the end of the year to ride the momentum once it starts taking off. The AI-led demand may also be coming later than expected, but overall, I think is a company that presents a very, very interesting profile. So that's all for today. Hope you enjoyed it. See you soon.